Markets will be focused later this morning on the monthly jobs report from the Labor Department. The futures right now, as you can see, pretty strong, based maybe on more de-escalation, maybe positive sentiment about the president's conversation with the president of China. Let's talk markets with Stephanie Link, chief investment strategist, portfolio manager at Hightower Advisors, as well as a CNBC. Good morning, Steph. I don't ever think you didn't sell everything, that's for sure. And I think you were finding some values on Liberation Week. You were liberated to maybe find values when we got down. Can you believe we got under 5,000 on the S&P at one point? We were 49 and change. So almost 6,000 and less than 3% from the highs, all-time highs, 59.39, indicated higher today. We in a trading range where we go back down to test some of those, or at least stabilize here, or would you be surprised if we went to new highs in the next quarter?
I wouldn't be surprised if we see new highs, Joe, and that's because the economy, despite all of this craziness that we're getting every day, the economy is still growing. We look at the Atlanta Fed tracker just for a gauge, not the actual number itself. But you're running at about 3.8% growth this quarter alone. No one would have thought that. And I don't know if we're really going to get 3.8%, but I think you're something like 2.5%. And in the 2.5% environment, you can do about 8 to 10% in earnings. And oh, by the way, we just grew earnings 12% last quarter. So I do think that we could see some volatility. That would be normal. We've had a nice run. We're up about 20% from the lows. But I think you want to be buying any of those dips because the fundamentals still remain pretty good.
So the jobs number today could confirm ADP that maybe it's not 250,000 or anything like that, but still solid, or do we start to see signs of some slowdowns?
I wouldn't be surprised to see some signs of slowdown because you're seeing it in the weekly initial jobless claims. That's more coincident indicator. Non-farm payrolls is backward looking. So initial claims, you're now running at about the 4-week moving average, about 235,000, right? We were at, 200 to 210 for such a long period of time. So we are starting to see a little bit of a slowdown, but still pretty healthy. I mean, we talk about this a lot, that during recessionary periods, that number on weekly claims gets to something like 350 to 375,000. So you're nowhere near a recession, but I wouldn't be surprised to see a little bit of a slowdown. I will say JOLTS were pretty good, and Challenger gray layoffs down 11% month over month last month. So I still think the jobs numbers are good.
Okay, with that in mind, you do love. I think you love. It always sounds weird. Tops down, bottoms. There must be a better way to say that. But you do like individual names. What do you think is well suited for this? What you just described.
Well, a couple of things. I don't own Uber yet, but it's on my watch list. I really do want to buy it. So if that stock, it's very volatile, we know. And if that stock were to pull back further, that would be on my watch list and my buy list. I mean, Uber, it's a verb, right? I mean, they have the dominant market share, 68% market share, 34% global share. They're in 10,000 cities and 70 markets, and they have a whole new product cycle coming. So the stock is up 41% year to date. I don't want to chase it, but it is still down 7% from its high. So that's one that I would actually take a look at. And I'm really excited that the CEO of Palo Alto just joined their board. That the CEO at Palo Alto, he has seen his stock price go up 480% since he has been the CEO. And I think you're going to see more M&A as a result of him being on the board. So I like that stock. I don't own it yet, but it's on my watch list.
Keep going. We have time. What else has caught your fancy?
Okay. So Becky and I were talking about Costco a couple of weeks ago, and I had said that I'd love to buy that. I said to her, I'd like to buy the stock. It's not down enough, but it was down 4% yesterday, which is a pretty big move for Costco. And that was because their comps only came in at 6% and the expectations were 6.2%. I mean, the U.S. comps at 5.2% were really terrific as well. It's not just there on a valuation basis, but it is such a core, it should be a core holding. And so that one is also on my watch list. And I think today's news on Broadcom, by the way, Joe, I think I own Broadcom. I think it's noise, the stock being down. It is up 75% since April. So very, very high expectations. But the AI story only gets better. And they actually did guide for higher AI. You're going to see $4.4 billion in revenues in AI that they just reported go to $5.1 billion next quarter. That's up 16% sequentially, and you're going to do something like $6 billion in the fourth quarter. So the momentum in AI is still there for Broadcom. So you use this volatility to be buying it.
All right, we're going to leave it there. Steph, you'll be watching at 8:30, I guess. I didn't ask you about you and Becky like shopping at Costco, or you like the stock, or both?
Well, I don't recommend stocks, but I have a Costco member.
Are you?
I've let it lapse, but I have the card.
Yeah?
Yeah.
You let it lapse?
I did. You buy too much stuff. It's like too many.
What's the multiple now on that? I mean, it's such a good company that it's almost like, what's it command now, Steph?
55 times. That's why it's hard to buy it here, right? But it's a behemoth, though. It's a behemoth, though, right? It's one of the haves versus the have-nots.
Juggernaut. Yeah, juggernaut. Yeah.
Very well run.
Juggernaut.
Okay.
Good word.
Yep.